Hi, this is Kerry Artek with Wicked Stocks, bringing you an update on the S&P 500 SPDR ETF. I did record this video on Tuesday, August 31st, 2021. I'm going to be showing you the same weekly bar chart throughout, and let's jump right into it. We have a long-term trend line. I'm not really a big fan of trend line analysis. Trend lines in and of themselves, I love to create channel structures from trend lines. But when trend lines, go back a year or more in activity on a weekly chart, I do respect them. And this particular one, I think, is sort of representative of the ceiling right now in the SPDR S&P 500 ETF, the SPY. And it this week is at 454.89, rising every week. Oh, by the way, just want to mention that I'm starting at least a weekly, and it'll probably quickly transition into a daily SPY analysis that will be on the wickedstocks.com website. I do the S&P 500 E-mini futures contract on a daily basis, have for years. So if you follow that market, you may also be interested in the SPY. If you trade the SPY, whether it's day trading or investing over the multiple weeks or multiple months time horizons, I think this analysis would be appropriate for you to follow. Anyway, that's that. Let's jump into the analysis itself. This trend line, 454.89, able to contain buying through September perhaps. Holding below it or testing it will allow monthly containment. The market then able to fall back how far south? Potentially over the next few months to this rising channel bottom that is based on that trend line this week at 403.95, rising weekly. Now, what is the indication of that? Because there's no clear indication we're going to test 403.95 anytime soon. For me, it would be a violation of this channel formation, 431.70. It goes back 4 or 5 months in time. 431.70 can contain at least weekly, possibly monthly selling pressures. And if settled below on a weekly basis, would then, yes, indicate that 403.95 longer term support, which can absorb selling, in my opinion, on a quarterly basis. So if we happen to test 403.95 over the next several months, it could conceivably contain selling through the first quarter of 2022. Until then, 431.70 rising weekly should be given its respect for its ability to contain monthly selling pressures. And once tested, we can rally back to that 454.89 rising trend line. Now, what is the indication that we will test 431.70? I need to zoom in just a bit and show you kind of a near-term 6-week channel structure presently at 440.38 this week. I don't expect to see that this week, although it is Tuesday. The week is a little young. You never know. If 440.38 is tagged later in the week, it can contain selling into next week. And if settled below, would then signal several more days bearish continuation down to the 431.70 formation, which once again can absorb selling through September trade and is our downward pivot point, our downward indication that if settled below would signal that 403.95 longer term support. So that kind of covers the downside. Let's talk upside, that if we close above 454.89, even on a daily basis, but you do need to follow up at the end of every week. This is a weekly chart. So if we close above 454.89 by a 1% margin, in other words, 459.43 or higher this week, the week of Monday, August 30th, and even on a daily basis, but certainly on Friday, what would that be? September 3rd, closing at 459.43 or higher on this chart does indicate longer term bullish continuation. I mean, we're already sort of grinding our way higher over the last, 8 to 12 months anyway. So we're already in an upward draft, an upward movement. But if we closed above the 454.89 trend line by the 1% margin, my next 3 to 5 week objective put us into late September, early October would be 476.83. That channel structure able to contain monthly buying pressures when tested. And then ultimately, I do think that this wedge formation that is developed with the trend line being the top of that wedge at 454.89, that if settled above, should then yield. And I'm going to say 3 to 5 months is realistic. the 513.17 rising channel top, which if tested, say, into early Q1 of 2022, can contain at least quarterly buying pressures, possibly well into 2022, because once you test that channel top, the market can fall off for 3 to 5 months or trade sideways in any event. There is precedent for a 3 to 5 month move. We haven't seen it in a while, but if you go back to the COVID low and then the May-June high that followed, that was about 3 or 4 months. So if we close above 454.89 by that 1% margin, I think you should allow for a 3 to 5 month rally to that 513.17 rising channel top, which is rising weekly. And just an FYI, when I start the weekly analysis, and then it will, I think, transition into a daily report. It'll be on wickedstocks.com. It'll be priced very affordably, and you'll be apprised of all these levels not only on a week-by-week basis, but I'll be using daily chart analysis, which will give you a much more fine-tuned honing in on these levels day to day. And that's really all that needs to be said for this particular Wicked Stocks video analysis on the SPDR S&P 500 ETF.